Hey everybody, welcome to the channel. I'm Jimmy, this is Taking Trades. Thank you for stopping by. If you're new, consider subscribing. So today, I wanna give you one tip on stop losses that you need to know before every trade that you take so that you don't smother your trade. You give your trade room to work. So we're gonna jump into that today. I wanna show you one red trade where this one tip will apply, and I want to show you one beautiful green trade that I took today on ticker SERV. So let's jump into it. Okay, as you can see, I have the SERV chart up, which is Service Master Global, ticker SERV. So this was my green trade today. It pushed up out of the open really strong, sort of consolidated just a little bit in this area, and then you can see I took 24 shares short at 55.19. I had this nice crossing candle right here, and if you look down you can see we got a push up in volume, and I think you could see it better if I bring this up just a little bit. So right here, this candle was a step up in volume from the one prior. RSI, we were over 70. Things were looking overbought this morning. So as we got that strong cross, I bought the open. But here's the thing about this trade that I want to point out. I want to talk a little bit about stop losses today and my experience with them and when I have success and when I have failures. And I've noticed, you can see that I took the ATR indicator off my chart. I was using the ATR a lot to determine what my stop loss should be. And in this case, it would have put my stop loss sort of at the tops of some of these candles. Now you can see when I got short here at 55.19, this candle pressed all the way up and almost matched this candle before it rolled over. And that would have stopped me out if I would have used the ATR. So when I took this trade, I stopped myself above the wick of the high candle. So at 56.50, I stopped myself, and that just allowed the trade some room to work. And by giving myself a slightly larger stop loss, I just used the calculation. I said 56.50 is my stop. I was getting an idea for where my entry was going to be. I took that amount and I took my risk. I took $50 risk on it, and I just took $50 divided by my stop loss, and that gave me the number of shares to take. So it kept me appropriately sized, kept my risk right where I wanted it, where I knew what my risk was, and then it allowed a lot of room for the trade to work. So that's why I think I had success on this today. So you can see it was kind of an automatic. I only took 24 shares. I took $50 and I divided it by my stop loss amount. And if I hop over to my sheet here, you can see my stop loss was $1.31 right here. It says ATR. I'm going to probably have to change that to stop loss because I'm not using the ATR as much because I think it's more effective if I just create an appropriate stop loss for myself by going over the high, the most recent pivot or the most recent or the recent high. So I did that here. We got this nice press down. It sort of just hung underneath this 9 daily SMA, and then I got this nice dropping candle that increased my confidence. It kept me in the trade, and then I watched it trickle on down, and I ended up covering my position at 53.06 and took a $51 winner. So all in all, a pretty good trade on that one. And now I want to also get into a losing trade I took, but I want to show you why I lost, and it's due to this one thing. What you need to know anytime you're entering a trade is you have to have your stop loss appropriately placed. So in this scenario, AIG this morning pressed up, it was getting up overbought, pulled back, rode the 9 daily SMA, and then you could see right here this crossing candle. Pressed down, the volume bar came in, so I got my increase in volume, which is my signal to get to the short side. So when this candle opened, I took it short, but on this one I used the ATR, and it actually put my stop loss right at $50.78. And as you can see on this candle, we went to $50.79. So I got stopped out by just a penny or two, and then the trade rolled over and worked. So where I should have been stopped, and I'm going to zoom in just a little bit so you can see this better. So if I get that crossing candle, and then I get the open on the next candle to go short, my stop loss needs to be in a logical area, which could be the high of day if we're close to it, or a nice pivot low. So this candle right here is the highest wick of everything around aside from this high. So we had this push up high, we had a pull back down to the 9 SMA, another push up, a pull back, up, pull back. So you can see we're setting lower highs. So this wick right here, if I had to stop myself at $50.91 and let this trade go, I would have been in the green on it. But instead, I got stopped by a penny and it rolled over on me. So super bummed about that. I should have had 2 winners today. Instead, I had the 1 loser, 1 winner. But just an unfortunate way that played out. So I think from here moving forward, I'm going to make a little adjustment in my strategy. And the one thing that you guys need to know is I'm not going to use ATR anymore for picking a definite stop loss. I might use it as a guide to get an idea for what the candles are doing. And if you're not sure what the ATR is, it's the average true range. And if you type ATR into the search box on Investopedia.com, you can get a lot of great information there and read more about it. But I was using it previously to set stop losses and also to help calculate my take profits. But today, after having a beautiful trade on Serve, I just thought, you know what, I think I'm going to be okay with a logical stop loss and just not using the ATR for a definite stop. Stop yourself above a high or above a pivot and then give it plenty of room. And with this being the case, I feel really comfortable being stopped above the high of the day or above the pivot and then setting a stop limit to sell. And then it's basically a bracket order and I can just walk away. I can go do something else with my day because I know I'm stopped appropriately and I know I have my take profit right where I want it. Stop losses have been something that I've been uncomfortable with, and I want to hear if some of you have been uncomfortable with them as well, where I think, oh, is it right? Should I move it? Should I push it out more, bring it in more? But the problem was if I bumped it out, I was increasing my risk at a level I didn't know because I wasn't doing calculations, every few seconds. If I moved my stop loss 4 cents, I don't know the exact dollar amount of risk that I'm adding to the trade because I didn't pre-calculate it. But if I pre-calculate as $50 risk, I know what it is, and then when this candle's getting ready to close, I can kind of see where we are, and I might give it a little buffer, maybe 5 cents on this trade, but just to get a good stop loss in place that makes sense and has room to work so that you're not interfering with the trade or getting stopped by a penny and then having it work like I did today on AIG. So anyway, hope you guys had a green day. Comment below, let me know how you did. I also wanted to thank you to the community because we just broke 400 subscribers and that's amazing. And I'm looking forward to pushing on to 500. So thank you everyone for all your support. If you're new to the channel, subscribe. We're having a lot of fun. I love the comments. I love the feedback. Keep that coming, and I'll see you tomorrow. Thank you so much.